Everybody, morning. Hey, Ringo, thank you for being a JTT supporter. Awesome. Awesome. Thank you so much. And welcome, everybody. Welcome. We've got channel members Gaten, Dawn, Diane, Mad, David, Donald, Will, Craig, Ringo, Ted. And welcome. Can't get in what? You're here. I wasn't live until just now. Hey, Scott. Morning. Good morning, everybody. And then we've got some subscribers like Ed and Larry. And welcome, everybody. Looks like you remember, give me a thumbs up if you find anything I say helpful, beneficial along the way. We've got hedge funds flipping bullish. The most bullish in 7 weeks. Hey, Kimberly, my favorite subscriber. Right there in the chat. Hey, Kevin, good morning. Good morning. So hedge funds flipping bullish. Yeah, I don't usually just go to Zero Hedge and share stuff like this, but this is kind of interesting. It's got some interesting charts thrown in here. So S&P weekly change, we had a positive week, little less positive than it was the week before. This is scary. This one right here. The book value of the S&P 500, price to book. I guess this is price to earnings right here. Price to earnings 25x at the peak of 99. And interestingly enough, we went down. There was no second peak on that because it was all one big correction. A lot of people are like, I gotta put my monster up here for everybody. Set it out of my way because I was moving stuff. Recorded a video for everybody over the weekend there, and it'll be out on Wednesday for normal subscribers. For channel members, you can go watch it after we're done here. It's on the video tab. But this was all one big correction right there. It took us almost 10 years to get down to the bottom to flush that baby out. Now we're back up. August 2020, we were at 23. Had a nice little pullback. Now we're sitting at 22.5x. See that 22 bled us down. 30-year average is 15.5x price to earnings on the S&P 500. It's kind of interesting. This is the one I was talking about. This one, price to book. We hit the highest level ever. Look at that. We went from a 5.1x down to a 1.6x right there. Basically, took almost 10 years. From March double lot to February 09. Now we're back up here. Only took 25 years to get back, from peak to peak here. Only took us 25 years to get back up here. What could possibly go wrong, right? Look back here though. We could go set a new. What's interesting to me, this 2.2 is the average, roughly, hanging right there. 2.1 price to book. So it's if you don't know what a book value is, you liquidate all the assets of the companies in the S&P 500, and the prices that they're valued at right now is 5.3 times their net liquidated value, basically. Their book value. The value that they have on the books. So that's pretty elevated. I like to look at price to sales, but that's not, it's elevated. It's not super crazy. Goldman right here, look at this. Goldman Sachs also points out, after becoming the most hated sector of the year, healthcare is finally up 4% this week. As I said, the sectors that are beat down the first half of the year may not stay the most beaten down the second half of the year, but they're probably not going to turn around and be the best performers by the end of the year. So we may have made a bottom in healthcare. It's probably Not going to be the worst performer next year either. It may not be the best performer, but it's probably not going to continue to be the worst performer of the lot, of this, worst performing sector into next year. So we're seeing that United Healthcare make a big turn off the bottom. I think it's going to do a correction, but we'll see there. We'll see. And there's all sorts of fund flow data in here, and it's kind of interesting. We're seeing those hedge funds make a turn. I think it spooked them when we did that big up the week before, the net change. So there you go. Jumping over here, let's take a look at the dashboard really quickly. Switch up here, and Bitcoin, that alert down there right behind me says a 618 target vicinity. Just think, let me flip my, there you go, you can read it. That alert I set on here last week about the 618, we fired that off last night. Be careful. Now this one we'll have to flip to a, here's the price to sales for the S&P, hitting at 3.26. This thing keeps climbing. Keeps climbing. It doesn't go back. I mean, we have 2001, but we don't go back into the .com peak back here. It's price to sales. That means take all the S&P 500 companies, look at the value. It's going to take 3.26 years to cover of all the sales. We're not talking earnings or costs or anything like that. 3.26 years to cover the cost of all of the S&P 500 companies. I mean, it doesn't sound horrible, especially when price to sales over 30 is where my red line is. But when you look at all of them, that's pretty elevated. Pretty elevated. As we can see, we came way up off the 2009 lows where we were down at, price to sales was down at 0.81 across all 500 companies. And yeah, we've changed the composure a little bit. But interestingly of note, to me, what does that look like? 5 up, potential for a 618 retrace. Let's just kind of do a little fib magic work here. Yeah, we could go up just a little higher. We could take just the 3.51. I'm not predicting doom and gloom today. We could go on up here. Possibly even hit 4. That'd be where I expect it to top out though, somewhere up in here. Yeah, we could take that on into 2026 maybe. I don't know. See what happens. See what happens. Move, as Bank of America said, this is the one to keep an eye on. When move breaks back above 100, that's when things are looking bleak. But this is it's on a downtrend here. So you can set you a channel and an alert. We break through the channel, something's cooking. All right. A lot of people are like, hey, how do we know when things are coming apart? I keep telling you all these little pieces, parts. Here's one. Set an alert here. Just gave you another one. These are technical market internals right here. They're not things I make decisions on. They're things, it's my market dashboard. I kind of keep an eye on them right here. RSP, this is an interesting. So this is the equal weighted S&P 500 run by Invesco. Can we break through and hit an upside target? Like, is this going to be, if we pop up here, is that what's going to be the top? I don't know. I mean, I can't say for sure. We made a top back here in November on the equal weighted, And this ground down all the way into that April low, and then we haven't been able to make a new high, despite everything being glorious, right? Because 80% of the gains on the S&P 500 by market cap has been in just 10 companies. The Magnificent Seven, plus Broadcom, Palantir, and Oracle. That means the other 490 companies in here just kind of humming along. So we don't see that giant up on this chart. I mean, it did make a giant up, but we don't see that out to new highs up here because everything's equal weighted. So I've built this kind of market dashboard thing. We look down through here. S5TW, stocks above the 20-day, 50. S5FI, stocks above the 50-day, 50. S5, the 200-day, 60. NASDAQ, 20-day, 45. NASDAQ 50-day, 48. NASDAQ 200-day, 62. Russell, 20-day, 57. 50-day moving average, 57. 200-day moving average, 50. So this one's a little bit weaker. Why do I say that? Because the 200-day, we only have 50% of the Russell 2000 stocks above the 200-day. This one's got 62, and this one's got 60. It's kind of my market dashboard. Where we've been recently. If you've not seen those before, they're giant market oscillators. If you're new here, kind of keep track of these. When we've been at the top, we're probably going back to the bottom. So S&P 500 stocks above their 20-day. We're due for a visit to the bottom. Now, what's coming up this week that might cause that? Well, we have a fun event coming up on Thursday, Friday. Friday is really the big show. Right here, it's called the Jackson Hole Symposium. What if Mr. Powell comes out of that and says, hey, conditions don't seem right to do market cuts when we do the FOMC meeting here in a few weeks? Oh, no. Big market pullback. We've got the FOMC meeting. I believe it's right there on Wednesday. Yes. So on the 17th of September, just shy of a month away. Got this coming up right here. Everything I keep reading says it's a foregone conclusion. We're going to do a 0.5 point cut. That just doesn't make sense to me. Like that's what we're going to do. Especially when we look at this. This does not support. They do a 0.5 point cut. 0.5 point cut. A 1/4 point cut puts us right here. 0.5 point cut puts us right here. The market rate's right there. Maybe there's room for a 1/4 cut. But if this thing turns, they could be in big trouble really quickly. Now, I think what they're banking on has a lot to do with the video that's coming out on Wednesday. There's a systemic risk they've built. It's kind of interesting. They created a customer for these 2-year constant maturity bonds and the short-term T-bills. Created a customer, so they're trying to push this down by forcing a certain customer to buy the bonds and trying to give that room for this to come down more. I don't know. It's been a while since we did a cut. I don't know. There have been 88 central bank cuts this year around the world, 0 for the United States. That's where the pressure is to make a cut coming up next month, but does our market actually support it? Interestingly enough, the Bank of England made a cut and their mortgage rates went up last week. Every time they cut, the mortgage rates go higher. So something's not, everybody thinks that there's this common misconception that treasuries have a direct effect on mortgage rates, but it's not true. And 10-year blah, 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 DGS 10, it's not really budging here. I mean, look at where the Fed rate is hanging right with this thing. This thing breaks out, mortgage rates going much higher. Now, why are mortgage rates closer to the 10-year? Has to do with the average household stays in a house about 10 years and blah, 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 blah. And so the 30-year mortgage rate is closer to the 10-year. But still, it, U.S. see, mortgage 30 U.S. right there. We're hanging out at 6.5. That's a lot higher. A lot higher than even the 10-year. And this thing doesn't look like it's breaking down to me. In fact, it looks like it's in a consolidation before we spike even higher. So there's some systemic risks, I guess you might say, built up in the market right now. And if you want to recreate this chart, DGS2, Delta Golf Sierra 2, click this button right up here, compare or add, type FED, FUNDS, that'll get you the orange line right there. The blue line is the 2-year constant maturity. And why do I watch this? Because for as long as I've been trading, every time the orange gets above the blue and then we start doing big cuts, that was a market freak out. That was a market freak out. That was a market freak out. .com bust. Great financial crisis bust. COVID bust. And now we're sitting here cooking another one. Now, back in late 22, I speculated that we might have a period of sideways. Just E-wagged it out here a ways, and then a period where we climb higher. That still hasn't happened yet, but we might actually raise rates more. Inflation's actually creeping up. So I'll talk more about inflation coming up. How do we make money today, though, right? Like, that's, people get sufficiently freaked out, like, oh man, everything looks pretty bad. We might have a market pullback this week. Like, that might kick off from Jackson Hole. Like, if they change the tune a little bit. But looking at the overnight action, S&P 500, how does mainstream media know what the market looks like, how it's going to open? They watch futures. I watch futures, try to glean some information here. This has turned a little bit bearish on the small time frame here. We're underneath the 15-minute roadmap line. If you don't have the roadmap line, links in the description. The video pinned to my channel kind of explains what it is. Looking at the 30 minutes. It's like everybody just wants to know, what time frame do I watch? You watch them all. If you want to know when things are turning, right here, came down, and now we poked through. Now we're underneath. So now this is resistance. Now we've got resistance. If we get back up through, we're probably going higher. If we bounce off, we're probably going on down to the 1 hour. Right. I mean, 1 hour is really close. The 4 hour gives us a little bit more room. Should be right about here. Yep. 63.84. So if we poke through that 1 hour, probably coming back here. You know, when's the last time we were there? Beginning of August. That freak out we had a couple weeks back. Temporary freak out, back to new highs. Now, I'm still kind of bullish big picture. We didn't hit the extension, 65.18. Look at the cat. You know, why am I looking at this and not the cash index? Well, cash leaves gaps. Not fond of gaps. When you look at this, we got a gap, a gap, a gap. We're just sitting here consolidating right now. We're above the 15-minute, so we've got some divergence between the futures and the cash index. Which one's stronger? I don't know. You tell me. Now, we still got upside to go here also. Still a little bit biased to the upside, but I'm cautious. 6,500. 65. I kind of expect that to get hit at this point. Came up, we hit the 1.1448. You're like, what kind of fib line is that? It's 90% of the way to the 1272. I did a whole bunch of math and statistics on it and found that that level kind of matters. We did a pullback, and now we're going right up for that. Could we go on higher? Yeah. Look at the bigger picture moves. Bigger picture moves. When you look at the pullback we did from the dot-com bust through the great financial crisis, that 686 extension of that pullback is hanging out right here at 6,700. Just above us. That's a 1% move right there. Only 1% of stuff makes that move. Just happened to be the whole market. That's kind of crazy. What happens after that? Probably a big pullback. Maybe back down to the monthly. Maybe like, holy moly, no way. And be careful out there. I've seen a whole bunch of stuff over the weekend that Nvidia is now being considered too big to fail. That's exactly the kind of rhetoric that gets us in trouble. Big trouble really quickly. There's not... just think about this for a second. If Nvidia took a 50% haircut, dropped $2.2 trillion, where does $2.2 trillion come from? I mean, U.S. government's adding debt. Every 100 days, we're at $1 trillion. So we're talking about, about 3/4 of the year, dumping $2.2 trillion in here. I mean, there's not other big companies you can suck $2 trillion. I mean, look, you'd suck the value of Tesla and TSMC, suck the entire VU, suck Broadcom dry, suck Saudi Aramco dry, just to get $2. Suck Facebook dry to pump up. So it's too big to fail. Systemic risk. We've got to prop it up. Like, how do you prop up something that might drop 50%? That's the risk right here. I don't think there's enough money to do that. Another misconception I heard recently is like this rhetoric about there's money on the sidelines. Look at all the money that's invested in money market funds and blah blah blah. It's like, okay, for stocks that are listed on the stock exchange, for every buyer there's a seller. For every seller there's a buyer. Right? Everybody that transacts stocks. So there's no stocks sitting on the sideline waiting to be bought. So there's no money really on the sideline. All the money's in the market. If you take money that's on the sideline and you buy, somebody else is selling. So that money, effectively, the same money that got put in got taken back out. kind of the misnomer and fallacy of money on the sidelines. For every buyer, there's a seller. For every seller, there's a buyer. So I am biased still to the long side. Look at the rest of the picture here. NASDAQ probably still got some upside here. Came up really close to that 24. When we dive down and look at the smaller pullback there, we still got some upside potential. Kind of coming on up to 24.1, 24.4. But as I talked about last week, it looked a little bit like we might get continuation lower, and that's kind of what we did. We did a ABC down, we did a retrace, we held the lower high, and then we're pushing down. Part of a bigger ABC here. So where might we end up? We may make one little push right here, and then this baby turns itself around. Right there. I'm going to set an alert there. Now, it could be done. We tapped, and we kind of double tapped it right there. So watch the 30-minute there. We get above the 30-minute. You can watch the 15-minute. We bounce right off of that. Get above that. Bouncing off the 1 hour. Bounce off the 1 hour. Sets up a new pullback. Wherever the low might be. New target. 24.1, which kind of matches the other 24.1. It's already sitting there. That's what we got cooking. Russell came up, hit that resistance. I mean, I drew that, and then the next day we hit it. It's kind of crazy. Then we're right back down here. If we break down, puts downward pressure. If we bounce, break above this level right here, 23.40, Russell might actually play catch up. When you look at the daily chart here, severely behind. NASDAQ and S&P 500 up here playing around. This thing's still down here. It's a lot of room for catch up if we're going to do that. But it's a lot of room for outperformance to the downside if things turn. So this one's not being very bullish right now. Not being very bullish at all. Oil. Looky. Still short oil. Maybe like, how do you play short oil? SCO, baby. SCO, just buy some shares. Looking for a pop up into the 22, 23 area. That's what I'm looking for. I'm sure some of you are going to be like, I should buy options. For the love of your account, be careful. Leverage, tickers, cut both ways. Like if this doesn't drop out, or if it takes too long, you're going to lose all your money on options. If you just buy a couple shares here, that's a pretty good little gain. All right, when I first started talking about it right here, you had the potential for 33% upside. Now it's a little bit less. As we've poked through the support, now you're down about 27% maybe. We only get to 22, maybe you only make 20%. Still a pretty darn good. You're still beating the S&P 500 for the year with one trade. Although I don't recommend you put all your money in that to, control your exposure. Don't risk all your account on one trade. Gold, still grinding in here. Still expect that bigger correction. It's been consolidating. Tried to break out, got rejected. That's typically what we see before we go on down and make a lower low below that move we did back in May. Once we do that, sets the stage for outperformance to the upside again. Bitcoin going on down, hunting down into the resistance that I outlined last week. We're down in that zone. That might be the bottom right there. That might have been it. Have to watch for break back above. Came down right there. Save it. There we go. So the next upside target, if we can pass the mustard. Pass the mustard. Nah. If we can muster a rally here, 134.5 would be the bullish target. If we stop at this vicinity around 127, that's not looking great for continuation to the big picture upside targets we've been looking at. And funny enough, I drew that right there, and now our upside target is right there. That would be support, and then we go on up from there. So looking for that push out to 134.5. But if we fail here, if we get below 114, as I talked about last week, we may be pushing on down to 110, possibly 108, down in there. Maybe even going to visit the daily roadmap line. Haven't been down there in a while, but that could be all the way down 106 right now. 106, 107. So it opens the door if we get a bigger correction here. Ethereum rejected that red zone, getting more weakness, and the ideal spot for this to correct down to, well, we touched it in full. Look at that. Fully filled that target zone. It's not magic, it's just math. Now, if we can break back above 4,600, gives us a real shot at pushing through the resistance zone right there. Yeah, for people tell me, you know, technical analysis, you can't predict where the price is going. I just did on Bitcoin and I did on Ethereum. I mean, just be careful out there. NKD pushing out still. This is global liquidity expanding. This is good for the markets continuing their march higher. 50,000 is our target up here. May stall out at 48 to 49,000. There is a resistance level at 46. Been watching this for over a year. We are now in breakout territory. We may pop up here, get a little market freak out, retrace, and then come back up and be like, well, if this is rallying so hard, why is it? This is not an immediate, like this breaks out and this goes up. These things are like freight trains, all right? Like this one starts breaking out and then this one follows along and this one follows along and this one, you know, all these follow along. This is money coming in the market. Money takes a few days to a few weeks to go places and cause big effects. Dollar still looks highly likely to push on down at least to this vicinity right here, if not an extension down here. Doesn't mean we won't do another retrace, but that we already did like a A, B, and we've got the C set up right down here for 96.5 to 97, if not down to 95.5. Apple dumpling, what's crack-a-lackin'? Nothing. We're not really moving. Still has this set up to potentially go down again. Amazon, just grinding in here, back up. We almost filled the gap. Might get a negative reaction on that. Kind of have so far, but if we can break through this gap right back here from February, 254 upside, maybe 265. Google keeps pushing up higher. If we can get, about to fill that gap. If we can fill that gap completely, get above it, sets up 216 on the upside there. Meta, we hit the target, 817 and be above that. If we retest the breakout, see this was a resistance, broke above. If we back test it right here, can set up that move right there. 817. So watch for it to test this breakout level. If we turn back green, that'd be a good sign for going higher on Meta. Microsoft, I still expect this to come back down to at least this fib line before we go on up. I just realized that I didn't have the log mode turned on, but that doesn't matter a whole lot. Probably going to come back down right in this area. Maybe down here, maybe down here. We'll see which one we hold. Turn back higher. It could grind down, meet up with the roadmap line over here, and then bounce. I don't know. Like one of those things, but downward pressure on Microsoft for now. Nvidia, we're just grinding in here. Probably going to go up to this 212 area. That's a crazy number when you think about it. Let's grab the calculator real quick. Think about 212 minus 182. $30 upside. 24 point, whatever it is, 24, basically $25 billion. $25 billion per dollar. So that's $750 billion more in market cap right there. That'll make Nvidia a $5 trillion company. Wow. That's pretty wild. Probably even more, like 7. Yeah. Might even be a $6 trillion company. Oh, my. 4.4 plus 0.7. Yeah, that's 0.4 plus 0.75 equals 5.1. 5.1. Man. 5.1 trillion. What could possibly go wrong? Tesla still grinding. Still grinding. So we're back testing this breakout here. If we hold it, break back above this level, back above 348. Cruising, baby. If we break back down, trend line analysis, weakest form of technical analysis there is. But if we can hold this breakout, looks good for going higher. 368, 378, possibly 400. Next upside targets there on that move. If we break back down, watch for support at the roadmap line. And if we don't hold that, probably going down to 270. Lower low than any of this price action here. Right down in here. Netflix has this set up to go back to the roadmap line. Remember, this doesn't have to happen fast. This could take out well into the later part of the year. And look how long this one took. Started in February. Didn't get down there until April. So March, April. Took a couple months. Let's see. Where's the time-based fib thing? There it is. This one right here. Go off of here. Yeah, we could still be out here. Right now, could be well out here before we get there. Alrighty. What could possibly go wrong? Yeah, that's right. All right. That's kind of the Mag 7 stuff. So I go hunt things moving in the pre-market. Dayforce. Yeah, this is obviously the wrong day it picked up there. Dayforce, nice pop. Looking at it, is that the bottom? Was that the bottom? You know, I have a hard time calling a bottom on this because it looks pretty rough. We've held it below that 618. This variable could be just a retrace on cog on the wheel going lower. So support for this one all the way down here. And resistance hanging out right here. Would I mess with it in between? Not right now. That's not my kind of... This. Where's the trend? For the last, say, 3 years, the trend has been sideways chop under resistance. Not for me. Duolingo been smoking. That pop on earnings last week. Rejected. That's starting to look like an ABC, everybody. Hey, everybody. First move down, retrace, rejection of the 618. Sets up the downside right down here. It's not magic, it's just math. That'd be an ABC, absolutely beautiful correction if we did that. A, B, C, right down in here. It's kind of like when I drew those on Bitcoin, Ethereum. Very similar. UNH left an interesting gap in here. Watch for that to come back down. At least do like some kind of retest of that break above zone right there. Kind of would expect a revisit of this area right in here at some point. Now it may come all the way up to the roadmap line before we come back down. Entirely possible. So upside resistance right up here at 380. Support right down here at 265. That's a big fat wide zone. Be careful. You can lose money playing either way. Playing short, playing long. If you just buy with Buffett, you could be upside down. Be careful. Be careful. Be careful. Be careful. Be careful. FSLR, as I said, this is probably going to outperform at least until those tax credit things for solar expire. We're pulling forward a lot of sales. So this thing may rally up in here, possibly even up here. And then heading into next year, we'll probably see this dive down again. This looks like a big three-wave correction in the downtrend. Had a downtrend going for a year or so. Had a sideways trend going for 2 years or so. Not looking super strong here for now. Yes, upside, but watch out for further downside. Newegg. This thing reverse split. This is crazy. We did a reverse split 1 for 20, and this thing's been hustling to the upside. Hustling. Big picture though. Got major resistance coming up right up here. That monthly chart. You can glance off of that and go right back to the bottom. Reverse splits are not like this major thing that changes a story on a stock. So be careful. Elevance. Now what? I think the psychology behind the reverse split, to me, it's a big warning sign, but I think the psychology is the stock made a 20x jump, right? This thing pre-split was down here, gosh, 20 times lower. We made a big jump. And unlike economies or economics, in an economy, when prices are high, demand drops off, right? Things get high, you can't afford it. You quit, quit buying it. Oh, that got expensive. I can't buy it anymore. That's the way economics works. Stock market, when things make big jumps up, it's like a flame just lit up. A light flipped on and everybody's attracted to it. Like all the bugs at night coming to it, and money gets attracted to things that pop and then pops and pops some more and pops some more. It sucks in more and more money. Next thing you know, your Uber driver is telling you to buy more. We're all going to be rich. We get a little complacent. And then the reality sets in. It's the bubble pattern right here. Be careful. Be careful, be careful, be careful. Especially on these dumpster fire type things that just go down. I mean, we've done a big move like this before. See this one right here? We're getting close to the top. Might do a little blow off, but be careful. That might come back. Yeah, exactly, David. Reverse split equals danger, and it's not the first time. We did this before. This company is absolutely horrible at managing a stock price. They reverse split over here. They reverse split more over here. That's 160. Like if you had 160 shares over here, now you got one. Like if you're a long-term investor, you're like, hey, I got 1,600 shares. Now you got 100. Be careful. I mean, you can do whatever you want to. I just stay the fudge away from dumpster fires. Like I just, that was the way right there. I just stay away from a dumpster fire. That's what that is. That's a dumpster fire waiting to burn your account. Yeah, if you're good at it, and you got the patience and the discipline and the time to stay in this, I mean, it can go higher than anything reasonable. So I don't try to predict when the bubble's going to end. Bubbles get crazy. They remain irrational way longer than you can stay solvent, as the old market axe goes. Elevance maybe turn the bottom. It looks a lot like UNH. A lot the same here on those two. I don't know. It's been in a correction for a while. Let's run a few proportions here. A, B, that hit the perfect spot for that to be an absolutely beautiful correction. A, B, C, right in the zone. Auto zone. Turnaround right there. Resistance up at the roadmap line, right around 370 right now. MDB hanging out at the roadmap line. This still has downside potential. Be careful. FUTU upside potential 191. BIIB. We're at that. This is a biotech pharma. Be freaking careful on biotech. That's a 3-wave up into the roadmap line. That can lead to further downside because this thing grinds down over time. ENTG glanced off the roadmap line right at the ABC correction. Trend is down. So here's the thing about ABCs. When you have an A, B, C, and we turn down at the ideal spot, this is the trend. ABC, absolutely beautiful correction of the trend. Trend resumes down. Now, something like ELV, you have to zoom out. Trend was up. We hit the monthly roadmap line with an ABC correction. Resume the trend up. Potential. But can you stay solvent in it? Like if it grinds here for 6 months, can you handle that? It might be on sale. Nice big fat correction. We haven't had. And there's the last one, it looks like. Look at the Echo Trade. There's a monthly Echo Trade set up here. That actually looks pretty dang nice. About the same size as a normal correction. Oh, look at that beautifully. Compare this one. A little deeper. Cool. ISRG. And grab this one. A little shallower than that one. So we have a confluence of support right there. Basically matching prior pullback. And then this pullback. So what do you kind of expect out of something like that? The same upside we got might be what we see again. Set up a target for Elevance somewhere around 850. Potential right there. Using the roadmap bounce tool, 626, 686, and 880. So that 850 came in right there. Be reasonable. But that could take a while. Like that could take, I mean, look at how long this one took. We bottomed out back here in 2020. This took till 2024 to get up to the high. So could take 4, 5, 6 years to get back up in here. All right, stuff that was declining. Coinbase. I've been looking for this to hit the daily roadmap line. Push it on down, push it on down. I think crypto's waiting for this hit here. A lot of these things need to correct on out. MSTR. Oh yeah, come on. Push right down in there. Push down in there. I'm long MSTX. I don't want to see this correct, but hey, looks like Ethereum might get a deeper correction here on the 2x leverage. Be careful on leverage. Hooks. And I was talking about who would might need a little correction here. We've got a little more upside potential up to about 125, 130, 140 maybe. Then I would expect that to pull back. We did that same sort of pullback expansion, pullback. That's just a copy of the expansion. That would put us up to 140. PLTU, PLTR with leverage. That could definitely use a pullback back down in here to 120. I listened to a Wired article about what they do. It's kind of interesting. We kind of have two different business segments. One designed around helping big companies manage their data, and another one surrounded by another one kind of aimed at law enforcement and governments. And they don't like collect data and all that stuff. It's just data processing software is basically what they do. They just use their AI tools to help find patterns and trends in data. It's kind of interesting. If you're interested on that, that's in the I saw it. Let's see, it was on the Wired homepage, but it linked to Apple Podcasts to play it. So I guess it's 4 days old. Be interesting. XRP, that looks a lot like the bubble thing, right? Like consolidates, break down, be careful. XXRP. UXRP also looks like we're breaking down. Roblox. So we're going to come back to the roadmap line. They've got some these legal issues cooking right now with their platform. Another 2x on Robinhood, another 2x on Robinhood, and 2x on QBTS. QBTS, quantum computing. I've been skeptical that quantum computing is ready to go. Had lots of people tell me I'm full of crap, but be careful. All right, stuff set up for bounce. Market roadmap bounce today. Possible entry. Let's grab the statistics. 60% is 1.5. Not great. 10 trades doesn't really mean anything. So ARCG. Potential for this to come on up to 27. There's the entry, 27.35 targets. ARRY. This was already in it from the past swing. Current swing. If you missed it. Oh, we already hit the target. Boom, hit the target. So you'd have to resort back to this one. Here's the high, here's the low. There was the entry, and we're working on 939, which is low price stuff. Be careful. HASI. That one's in it from back here. It's been all this price action. The majority of it's below the roadmap line, so be careful here. Potential to go up to 29.50. LYFT. Here's the high, here's the low, there's the entry, 17 upside target. MLYS. Here's the high, here's the low. And didn't quite trigger the entry. I'm sure it grabbed this high right here. Yeah, it did. And 1597 be the target. C. A little choppy action under the roadmap line. Not my favorite. 3370 targets. That's got 41 trades, 73, and a negative profit factor. I would probably avoid that. TT. E. Here's the high, here's the low. There's the entry. 64.91 target. It's reasonable. 30, 77, 2. Reasonable. I like it. I like to see it more than 30, more than 80, and a smoking profit factor. This one 90 and 4, but only 11 trades, so not really significant on the statistics. 1686. I'm going to talk more about statistics and probabilities and stuff like that during the Market Masters show this week on Wednesday and Friday. So prosperitypub.com/marketmasters if you want to come hang out with us. 11:30 on Wednesdays and Fridays. Me and Jack Carter gonna go through the markets and stuff. So here's this one, Vanguard International, 91.40. Somewhat biased for the day. Still looking for the upside, but we might experience some downside correction. Now, watch out though. If we start breaking down below this 15-minute roadmap line here on S&P, that could open the door for bigger downside. So cautiously bullish, I guess you might say, for now, since we came up shy of the upside targets, but we might experience some correction. And that symposium this week, if we get some funky news out of that on Friday, we could kick off a bigger correction. So be careful out there. We'll see you again tomorrow. Same bat time, same bat channel. Bye.